Tagging along with what Humberto Mercader just said, the narrative, in our view, by the way, I'm Rudy Sanchez. I'm a recovering banker turned fund manager. I run a company called Parliament Capital. I'm here with Lilian Diaz. Lilian has over 30 years of experience in banking, starting with Bank of Boston, Scotiabank, 17 years at Santander in various leadership roles, and now the executive vice president for the business group and head of the business group at First Bank. Maria Evelyn Rodriguez, chief retail banking officer at Oriental. Also 25 plus year career in private equity, banking and insurance. Prior to her role at Oriental, she was the CEO of Marsh Puerto Rico. Happy to call both of them family friends. So again, very excited to be here. As I mentioned, neither one of us is an economist, but we are going to talk about the economy. So bear with us. But the point is that this is going to be, like Humberto said, the narrative has to change, and the narrative, in our view, is changing. The headlines in the newspapers in terms of business and economy are starting to sound more favorable, more optimistic. We agree with that generally, and we're going to talk about why. The statistics are starting to roll and go in the right direction. One thing that we follow as lenders is total employment, for example. There's 1,128,000 actively employed, fully employed individuals in Puerto Rico today as of October 31st. That number hasn't been that high since February of 2009. So 14 years of what has been a very crappy narrative and a lot of very, sorry for the words, of a very negative sentiment on the island seems to finally be turning, right? So today, and it's all not all gonna be rosy, but today we want to highlight that and also dig a little bit deeper into what could derail that process that we are seeing. So with that, I'm going to start with Mari, actually, Mari Evelyn. The question is for both of you, but Mari, I think if you can share with us kind of the economic indicators and the economic activity indexes that you're seeing and what positive signs you're seeing within kind of that activity.
Sure. So thank you, Rudy, for inviting me to be in this panel, and it's great to share with Lilian. We've worked alongside of each other for a long time, so it's really great to be here and to share with you. Like Rudy said, it's just our perspective on how the economy is and how it's doing. So yeah, you started off with the employment figure, 1,000,001 if you include farm employment, non-farm 945,000, highest level since 2009. For those of us who have been doing this for the time that we have, Lilian and I will exclude Rudy, but the economists, we were always speaking about low employment participation, how low participation is, and we're now at 45%, well, 44%. We were as high as 45 a year ago. So I will say, you said not everything is rosy. 2022 was, the boom year. 2021 was the boom housing year. 2022 was the boom growth here, right? GNP, everything else. So when you look at what's happened through September of this year, there is a little bit of a slowdown, but it's still, significant growth compared to what we saw before the pandemic, before Maria, really before, the famous declaration that we couldn't pay our public debt, right? And so employment participation levels are really healthy. Tourism continues to, it was in the news. It's in the news almost every day. Tourism activity, 12 million passengers, unprecedented. We're today or yesterday in the news, we're the 5th destination for U.S. travelers, up from the 7th. And construction is, really in a very, very strong position. So sure, overall 2023 is kind of flat compared to 2022, but there's a lot of pockets of growth, is, our view.
Yeah. Lilian, and how about you? I mean, we've talked about kind of the banking sector as a whole and how it's different than what it's been for sure in the past. So what are you seeing in terms of the banks and the
First of
economy?
all, thanks also for the invitation. It's great to have been in this panel with the both of you. I'm seeing similar things to what Maria Evelyn is saying. We're seeing retail sales going up, auto sales going up. We're doing more auto lending this year. In terms of deposits in the banking sector, which is also an important figure that we look at, there's FDIC data that's published every year, June of every year. And if we compare pre-pandemic levels with today, we're still up about $12.8 million in deposits in local banks, FDIC-insured banks, excluding government. I'm talking retail and commercial.
12.8 billion.
12.8 billion, more than prior to the pandemic. After the pandemic, we saw a spike, so it was a lot more. It's been decreasing over the past year, but still it's above pre-pandemic levels. So there's a lot of liquidity, there's a lot of deposits in banks, in the economy of retails and commercial customers. That's a positive sign. Another positive sign that I would like to mention is the Highway P3, which was recently announced. I mean, that's great news for Puerto Rico. It's Abertis, a Spanish company, coming to the island. They're already here, but putting more equity into the island to do a P3 for 40 years. So they're betting on our economy to be here for 40 years, putting their capital. And also it's being financed by international and local banks. So there's an appetite to finance things in Puerto Rico. And at the end, it comes from toll revenues. So it comes from the local economy. So they're betting on Puerto Rico. Local banks, we're also betting. We're putting 600 million of the financing is coming from local banks. First Bank is committing 150, and the rest of the financing is coming from 7 international banks. So there's appetite to lend on the island for good projects that will move the economy.
And this was not in the agenda, by the way, but I wanted to clarify something and get your perspective. There were 11 banks in 2005. There's
Close to 20.
Yeah, close to 20 if you add the kind of smaller savings and all that. But now there's 3 main banks on the island, plus a significant branch of a Florida-based bank, plus a new bank starting up. So we have like 4 or 5 banks, really. But I'm hearing $150 million investment here, $100 million investment there, banks collaborating and participating in transactions quite often. In terms of not only, is that just a reaction of how well situated the banks are in terms of capital and liquidity? Is it just that the banks are starting to become more aggressive on the corporate side or commercial side? Or what can you add in terms of what's causing us to see this growth in activity at the bank lending side, especially on corporate? I know mortgages is a
well, I mean,
story.
I think the local banks and the 3 main local banks were all public. So what I'm going to mention here is just public information.
Right.
We're all doing very well in terms of income, capital, asset quality, all the ratios that are looked by the investors and by the regulators. We're all doing very well. So we have the capital, and we can invest in Puerto Rico, and we can lend. So, and when there are good opportunities, we have to make sure that we take those opportunities. Let's remember that, during many years, we were not doing many things because there was not a lot of activity. For example, construction activity was very limited. I would say from maybe 2007, 2008, for about 10 years, there was very little construction on the island, primarily housing. So there was very little we could do. There was not a lot of things going on, but now there is. So now we're taking opportunity on that. And for example, in terms of First Bank, we're lending a lot to the construction industry. We have committed about $500 million over the past 5 years. A lot of that is for housing construction because there was really very little done in the past. So there's demand for that, and banks are willing to lend, of course, to good projects.
Right.
I would say that banks are always a reflection of the economy of the communities that they serve. And so the Puerto Rico economy is doing well. So consumers' balance sheets here have improved significantly over the past 10 years. Businesses' balance sheets have improved significantly since 2016, and then banks' balance sheets have because it goes in tandem, right? And so, of course, we have appetite to lend, and of course, because the opportunities are there and the players in the market are strong, the banks are going to have a strong appetite. So it's very much a reflection of the economy.
And you mentioned construction a few times, and Mari, I'm gonna point to you. We know that a lot of this growth comes from federal funding, federal projects, a lot of them impacting rehabilitation or post-emergency funding, impacting directly construction. That's great, and it is what it is, right? I mean, what are your thoughts on that in terms of how we can maximize that funding, how we can make sure that it has a lasting impact on the economy, and eventually, unless we get another hurricane, which we don't want, they will
so
cease.
The good thing about what we're seeing in construction is it's very diversified, right? And so you're seeing, in Oriental's case, in our construction activity, we are seeing small contractors, middle-sized contractors, and large contractors all growing, right? The larger ones are getting more sophisticated. They're exporting a lot to the southeast of the U.S., sometimes elsewhere, but a lot in the southeast of the U.S. The middle ones are getting into larger projects, and the small ones so the whole industry is growing, right? Because of all of the opportunities that you have. And yes, it's fueled by public investment, right? I mean, I think everybody here hears the numbers, but it's good to remember them. 76 billion obligated of all the relief funds, 21, 25, depending on who you ask, has been disbursed. It means a little bit over 40 billion available. The last time I heard Secretary Lavoie speak about, from Core 3, speak about the rate at which these funds are being disbursed, he talked about we've reached a rate of about 2.5 to 3 billion, well, 2.5 billion a year. Maybe we can get to 3 billion, but that's about as fast as they think that we'll be able to deploy the funds. That makes, if it's 40, that makes a lot of years of continued activity in building infrastructure, that will be there. So, but it's not just on the public side that the construction industry is growing. It's also growing on the private side because it all has a trickle-down effect. And so construction is very much a multiplier industry. So it's good that that's one of the pillars of the economy that's healthy. How do we get that to, there's a lot of other things that we'll talk about. How do we get that to be sustainable and stay? The rest of the economy needs to grow, right? Sure, there's plenty of infrastructure work to do and housing to develop, but at some point, right, other parts of the economy need to grow, and so that this can be sustainable. Yeah.
Perfect. Lilian, you mentioned the kind of increase in foreign direct investment, an example of the Abertis transaction on highways, but just aside from that, in general, private investment, I don't know how, I know you're very involved in hotels, for example, and other areas. I don't know, where are you seeing the majority of the significant large-scale investments coming from? It could be construction or otherwise.
I mean, we're seeing a lot in the tourism industry, and First Bank has been very active supporting that industry, and part of it involves construction. Part of the construction lending we've done in the past year has to do with tourism. Also with low-income housing, we've seen a lot of opportunity. There's the low-income tax credit that is available there in order to promote this type of projects. We always have the challenge of, higher interest rates, increased cost of construction, labor increases, but with the low-income tax credit, we've been able to sort of support those projects, and the bank comes in, does the lending, and then we get repaid by the tax credit, so that promotes low-income housing. We're also seeing middle, high-income development of projects, condos, housing in general, and there's demand for that also. Act 60, of course, has brought a lot of people into the island with the economic means to buy properties at, at larger prices than those were not maybe, they were not sold in the past, but now it's moving. Many of there's a lot of activity there. So we've seen a lot of good things over the past 5 years. And as Maria Evelyn was saying, I think we still have probably 8 or 10 more years with a lot of inflow of funds. What's important is that we make good use of those funds, and we use it for things that will help us in the future, being more resilient. Our electric grid has to improve. Renewable energy, that's also something we've been supporting, many projects in renewable energy for some of our clients, particularly manufacturing companies that depend a lot on energy. So they're doing cogeneration plants or they're putting solar panels, and we're financing also those projects. And that would help eventually to be more resilient in our economy.
I was going to add that the small the small businesses and mid-sized businesses, but small businesses have proved to be really resilient. We have shown, there is growth in the total number of entities, small businesses that are in Puerto Rico. Bankruptcies have gone down, and those small businesses are finding ways, even in this very hard environment where labor cost is increasing and electricity cost is increasing, insurance cost is increasing, interest rates are, even in that environment, small businesses have found a way to really, and I think there's a shift there that's important. Small business has always been an important component of the economy, but it has been proven to be, I don't want to say smarter, but better prepared and more resilient and a more active contributor to the economy in the past years than before. So, you'll see, I would argue that probably all of the banks, certainly Oriental, we're doing a lot of work to support small businesses and to foster growth in that area, because it's, diversification has a lot of benefits, and so we see a lot of strength in that segment.
Adding to Maria Evelyn's comment, we also see the SBA's data that's provided by its Small Business Administration. Both Oriental and First Bank are very, very active lenders, and we work together with SBA. And if you look at the numbers for the last fiscal year, we lent, I think, about 10 or 15% more than last year. So banks are very active, and SBA is also very active. They want to support the small businesses, particularly in Puerto Rico, because we've been, hit by so many disasters in the past years. So they come to the island very often. They meet with us. So there's also a lot of opportunities for small business and support from local banks and from the federal government as well.
The C&I lending portfolio of all the banks in Puerto Rico, when you look at it together, is 60% up year over year, right? September 23 against September is 16% growth. So there's growth. Yeah.
Right. So you both mentioned energy one way or another. I'm curious, and kind of thinking of the government, the opportunities in infrastructure, significant infrastructure projects, and that we know are needed, particularly on the energy side. Obviously, the fact that a lot of the government instrumentalities are now out of bankruptcy or have resolved their debt issues, I think, and I'm not going to put words in your mouth, but I want to hear how that has impacted your relationship with certain agencies or certain segments of the government. But in particular, energy, there's also, and we've been seeing a lot of large infrastructure, solar projects that are kind of hung up in this web of the PREPA, LUMA, yada, story. Have you seen any progress there? Because those are, that impacts directly everybody here, right? Our households, our businesses, and they're clearly necessary from a resiliency point of view. Have you seen at the bank any progress with the large scale? Two questions. How has things improved in all of the other agencies that have resolved their issues? And how are things moving along within kind of the energy sector, thinking of the government projects?
Our perception is that, and there's people in the audience who can speak more to this than I can, but I don't see speedy development on the assets that were belong to the government that have been, and still do, I guess, but have been privatized their operation in deploying all of the infrastructure that needs to be deployed for the renewable energy projects to be successful and to be able to then be added to the grid. So, you know, I'm unaware of great advances there. What I do see, which is really healthy and which we're supporting, is a lot of private actors at the commercial level saying, you know, this is still an investment worth doing. So, you know, there are increasingly more players, both individuals and businesses, who will get off the grid, and the technology continues to reduce in cost and to get better in functioning. And so I see a lot more of the, and it's still very far from our stated goals by 2030 and 2050, right? But I see a lot of more progress being done just out of private efforts than, you know, the very slow. I mean, that's my.
Yeah, I mean,
Yeah, that's what we see every day in the projects that we get.
I'll join you. I'll join you with that one. No, we're seeing the same. I mean, we're financing a lot of renewable energy projects, but it's what Maria Evelyn is saying. It's just, you know, private companies doing it for their own sake. And I think, you know, there's still room for improvement in the government. There's some set goals that are very aggressive. We just need to move very fast to be able to achieve those goals, which are, I think, are very important in terms of having a resilience industry here on the island, and, you know, having more renewable energy, less dependence on fossil fuels. But projects need to be approved faster, and the government needs to move faster on that end.
Yeah. So on the non-PREPA relationships, right? Let's call them that. Which and I'm not an expert on this, but most of the agencies have resolved their issues, right? And we're seeing projects starting. Are the banks now more open to doing public projects together with those agencies? I know there was some either lack of opportunities or lack of wanting to participate in certain agencies. How has that changed over the last couple of years with the fiscal situation being worked?
We're right now active with the municipalities.
Okay.
I mean, I think banks in general just stopped lending.
Right.
When the bankruptcy, and there were so many issues that had to be resolved, and we just were not lending to the government anymore, but we're back, you know, back into the lending. Particularly municipalities are doing well. They have, you know, good balance sheet, good debt service capacity. We're looking at them again and lending to them. They do a very good job in many things around the island. So we're actively lending to them. And we're also working very closely with other public corporations, not necessarily in the lending side, but we're supporting them. They're receiving a lot of funds right now from the federal government. I mean, it comes to housing, highways, educational department, many of the departments. So we're helping them with their cash management, how to do things better, cheaper. So we're just very close with them and supporting them also.
That's our experience. Only with municipalities. There aren't any public issuances or even lines of credit that are being discussed from agencies, state agencies. No, not yet. Yeah.
Interesting.
Yeah.
All right. So talking about the consumer really quick. Okay.
Part of it is because of the restructuring of the debt. There's not a need, right? I mean, again, it was in the news a couple of days ago. COFINA proceeds or sales tax proceeds were $474 million over the budget of $1.2 billion, right? So the contingent value instruments are paying $474 million more than, you know, was the budget or the plan. So there's not a need at the state level at this point, right?
Good.
Yeah.
Good. So you mentioned, Maria Evelyn, you mentioned the consumer, the balance sheet of the consumer is in a much better shape, right? You mentioned that auto loans and auto sales and retail sales were continuing to go up. Do you see is that a sustainable pace? I mean, are you seeing debt levels rise at the consumer level, or are people just are they getting better jobs and better wages to a level that they can sustain those levels of discretionary purchases without going back to kind of the crappy, again, balance sheets that they had in the past?
When we have our planning meetings, we definitely discuss the possibility of the consumer strength slowing down. I mean, right? How long have we been talking about a potential recession in the U.S., right? It hasn't happened. 4.9% GMP growth last month, which everybody said was, not expected, much better than was expected. But we still have that concern as we plan going forward that there can be sort of a diminished capacity at the consumer level for spend. It hasn't materialized yet, right? 2023 is going to close with as many unit sales of autos as 2022 did, which is going to be around 128,000 units, right? The one area where you're not seeing any activity is going to be, or very reduced activity, I should not be so, is housing because of the levels of interest rates, right? It's very, and the lack of availability of housing. But our outlook is for, sort of a sustained, it's not, it's sustained levels of spend, maybe, a little bit of growth. And there's, as always, uncertainty in that, right? I think that one of the things that can change that and why we do things like this, like Icon, is what can we do to make sure that the, everybody would love a hockey stick, right? What can we do to get the hockey stick going? And the panels before have spoken about it. It's education, education, education. And the cost of electricity, we need to, that needs to get finished, right? Both the restructuring of the debt and then the investment to improve the grid. That's what's going to help us keep the economy going in the right direction and not tank. Because we can, I do feel, and we speak about this a lot also at Oriental, we do feel that you can decouple Puerto Rico to some degree, or less coupled than maybe in the past, the Puerto Rico economy from the U.S. economy, right? It's always been said that Puerto Rico's economy totally follows that of the U.S., but for the next 10 years, because of the inflow of relief funds, you could have a decoupling, right? If we do things right, I think.
Perfect. It's interesting because yesterday you talk about education. Yesterday we heard a lot about the fact that Puerto Rico has great talent, but it seems, the quantity of the talent needed and the workforce needed, particularly in places like construction, is just not there. Ivan Zavala yesterday said, I need more engineers, I need more architects, I need more construction workers, and there's kind of a mismatch. Obviously, we lost, I think we had almost 100,000 people employed in construction in 2005, and now we're down to like 30. So we lost 70,000 workers in the construction side. But there is that, hopefully, I'm hoping, and perhaps you can, I don't know if you're seeing anything on the ground, that we can lure more workers or bring in more workers from elsewhere, or somehow be able to fill that gap completely so that it doesn't derail the growth. If it would be great to have $1 or $2 billion for the next 10 years, just making sure that things keep stable, but it would be even better if we could get that growth faster, right? Because that creates a trickle effect that we need locally. But in terms of education, in terms of the businesses that you're financing, having access to the right talent, or are you seeing challenges in that area, or are you seeing anything?
Well, I think we all have challenges. Yeah. First Bank has challenges, getting talent, retaining employees. After the pandemic, I think we all have been going through that. I think it's better this year than last year, but still it's a challenge. In terms of education, and it was mentioned in the first panel, I think that's one of the challenges we have as a country, to make sure that people are well educated. That will solve probably a lot of the problems we have right now and will help improve the economy. And also universities. I think it's important for all of us, the private sector, investors, et cetera, to talk to universities to make sure that they give the correct courses and that they build the right, or they provide the right education for the jobs that are needed. In First Bank, we have a close relationship with many universities. I was talking to the president of one of the local universities, and that's something that he's always looking at. What do you guys need? What type of skill sets do you need? Skill sets, so to make sure that they provide the correct academic structure in that in the universities, and bringing talent back. I think that's important. Humberto was mentioning it, and myself, this is a personal parenthesis here. My son came back from the diaspora, so people are coming back, and I think we need more of them coming back. So Humberto mentioned making some changes to some of the incentives to make sure that other people come back. That would be great. I still have a daughter out there, so I would love her to come back. But I think that's important, to bring people to the island, bring people back to the island, people that are from the US or people that were born here, left, and for them to come back. That will definitely provide more skill talent to the different industries that are here.
As a comment from what I see in our clients, I'm actually, and maybe I was unaware of this before, but again, this is anecdote. I'm not giving statistics here, but anecdotally, I hear a lot more in the past 6 months about Puerto Rican business owners bringing in foreigners, either with H-2A visas or E-3 visas, but bringing in foreigners to work, some in temporary and some in permanent jobs. We know everybody speaks about that's hard to do because there's a lot of paperwork. It has a lot of regulation. It has a lot of supervision, and there's costs involved. But because the talent situation has gotten so dire for everyone, every entrepreneur that I meet with, when you ask them, what do you need? People, right? And it's on all the industries. So it's gotten, I think, because it got that to a point that was so bad, we have now learned about, immigration visas, work visas, I'm sorry, and are getting more knowledgeable in that and are taking advantage of that. Of course, it would be great if we fix all the other issues that are, that we can improve so that people just choose to make this a permanent home, right? Whether Puerto Ricans in the diaspora or people, who are not born here and who choose to come here because it's great to live here, right? So.
And we're gonna leave some time for questions, but I have one final question for you from my end, which is what worries you the most in your jobs about the economy? Is it the federal funds that might, when they end? Is it when the fiscal control board ceases to keep the screws tight? Is it just the demographic trends, which we can talk about that in a separate conversation? What keeps you up at night as bankers when you look at the state of the economy?
I mean, I think there are several challenges that we have. The important thing is to know which ones they are to make sure that we take care of them. I think we have great opportunities ahead of us. There's about $45 billion in federal funds coming in. What I guess worries me is that it's used properly. We have to make sure that we don't make the same mistakes we made in the past, that we have balanced budgets, that financial information comes out of the different agencies and public corporations, so that we use the funds properly. I think that's very important. We have a big opportunity, but we have to make sure that we use it properly. I think we have the right people, and we can do it, but we need to have that will to do it properly and not go back to the mistakes we made in the past. I think that's important for the future of the next generations.
And the interest rate, we haven't talked about interest rates, right, and the Fed, but the interest rate environment is huge, right? I mean, how long rates stay at the level that they are now, for how long that happens, will have a great impact on the U.S. economy and on consumers. And so that's something that, you know, there are so many variables that go into it, but even though we've said, you know, we see an opportunity for Puerto Rico to decouple from the U.S., the fact is there's a great amount of investment here that's from American companies, and what happens to them will impact what happens here. And so that's, you know, that's something that we keep an eye on.
So yesterday the crowd was a little bit shy with questions, but you have two leading executives from two of the largest banks in Puerto Rico. They manage directly most of the operations of the bank, differently on each side, including cash management, private wealth management, autos, mortgages, small business lending, commercial corporate. So you have like 9 minutes to go if you want to take advantage and address Lilian and Maria Evelyn. They are very candid, and they will either now or afterwards be able to 10, 20 questions. Ricky.
First of all, thank you for putting this panel for us. I'm going to ask you a question regarding the residential real estate market. It has changed dramatically in the past probably decade. And I think there seems to be a disconnect with the pricing of the houses and like for instance on the tiers of more expensive houses, 10, 15, 20, $30 million, there's a disconnect between how much you can get on sub 10 and over 10. How is the banking addressing the significant shift on the housing market, on the luxury market?
It's a difficult issue for the banks because there aren't that many properties over $10 million for individuals, right? And so, you know, for us, this is simple. Banks will look at what is the capacity to repay, right? The borrower has the capacity to repay. And in a second, at a second level, if they fail to have that capacity, how marketable will that property be if the bank has to dispose of it, right? And that's where you will see us get shy on larger properties. So, but certainly it's been growing. It's a market that has been growing, and so we will participate, but we will have a stricter, you know, loan to value requirements than you have for properties that have more of a market once you have to dispose of them. So, but you know, in our case, we lend to that market. You know, rates are high right now, and so it's a reduced opportunity, but we lend to that market. We do, yeah.
Yeah, we also do, but of course, I mean, it's an interest rate risk of having those loans in your portfolio for, you know, 30 years or whatever. So, I mean, the price has to be right and the loan to value has to be right. And we're, of course, more actively lending in the conforming market. That's what, you know, what we do the most.
Thank you.
We have a question over here.
Hi, thank you guys for your comments. On the commercial side, especially lending, we've got 3 banks on the island, some smaller. I look at it from kind of a competitive standpoint. You guys can command leverage, you can command rates, you can command personal guarantees. Would you be interested and open to working with other debt funds to potentially co-syndicate, to kind of lower your leverage, to make the market in capital markets more competitive for developers on the commercial side?
I will answer for, we do that already, right? And actually, Rudy, why don't you, I think Rudy, just for us
He
to
should
be
answer
quiet,
that question.
He's got a lot to say, and we can.
No. So,
yeah,
so
yeah.
we run a private credit fund, and we actually co-invest directly with the banks in what you would consider unitranche deals. I mean, obviously, we take different risks within that senior loan, and obviously we get compensated for that. That's evolved. and it's starting to be more commonplace now than what it was 5-7 years ago. So again, that's why I was mentioning earlier that I think the banks in general have learned or have started to not only work more amongst themselves, which I think they always did in terms of the large syndications, but also with the co-ops and credit unions, with private credit shops, and even individual investors. So they do. I think it's not. Our experience has been, except on a few cases where they have invited us, that it's typically transactions that we bring to them, so it's we do the underwriting, we prepare the structure, kind of trying to fill in the gaps or the things that are important for them based on what we know, and then the conversation flows a little bit better. So that's my experience, but we've done so with Oriental, we've done so with First Bank and Popular as well. Lilian, I don't know.
No, that's right. I mean, that's correct. I mean, it's three major local banks, and you know, there are opportunities out there that might need more than one bank, so that then we reach out to each other and we do things together. And of course, and we can do things with private investors or other type of funding, so that the project comes along and we can provide the necessary lending. So yes, we're open to any good opportunities to lend and do it properly.
Thank you. That's a good answer. Good opportunities, that's been mentioned a couple of times during this panel. What does the commercial good opportunity look like for you? Is it a certain debt yield? Is it a certain NOI, carryover debt service? What is that? What's exciting over the next 5 years?
Well, I mean, it all depends on the industry. It's not like a cookie cutter thing, but definitely we look at debt service coverage ratios, projections to make sure that, that you can keep that debt service over the years. In terms of industries, I mean, we look at many different industries. It's not like there's one industry we won't look at. We've done a lot in the health sector. We've done a lot in tourism. And as Maria Evelyn was mentioned, a lot of in small businesses. We're doing a lot of lending to entrepreneurs. We've seen a lot of them coming after the pandemic. Many of them just had a lot of experience because that's what they did before in their jobs, and now they're doing it on themselves, so we're supporting them. So we look at also experience. If we're going to finance something that's sort of new, we have to make sure that you know how to do it, or you've done it in the past.
And I would add to that, I agree with everything she said, and we always look for skin in the game, right? So, investors or proponents or principals who, are committed to the project and they, show it.
Of course. And last question, I appreciate it. Deposit relationships, is that a requirement for your lending?
It's a very strong preference.
Okay.
It's an
It is.
extremely strong preference. Yeah.
It definitely is. Of course, when we do
When there's a
transaction
syndication, then
between several banks, not everybody can have the deposit. So then we'll see which one gets the deposits. But if it's
Good
only,
question.
one bank lending, we'll definitely prefer to have your deposit, your commercial deposit, your personal deposit, That's a
So one.
we're very much community banks. I mean, even I don't want to speak for Popular, but we're very much community banks. So that's just a part of it.
So I was going to add, so for example, we have a few clients, borrowers that have operations that are not necessarily the ones we're lending against, and we might have them as corporate guarantors or co-borrowers or whatever, but we typically do want to have visibility and control over the cash flow of the specific asset that we're lending to, right? So then we're not a bank. So we work with the banks to establish control accounts agreements and all that. So typically the operation that you're financing directly, they're going to want to have it under their purview. But we have a lot of clients that have kind of U.S. Banking relationships, and they keep their main relationship there, but the LLC or the local investment account and operational account is established locally.